Ankita, Saxena. Well, it is a surprise that the Indian economy grew at the rate of 8.4% in the third quarter of the current fiscal. Now, this has significantly been higher than the estimate of 6.9% that we were penciling in. Well, on a quarter-on-quarter basis, we saw an uptick of growth by 80 basis points. At the same time, the GDP outlook for the entire fiscal 2024 has been raised to 7.6%. In a briefing after the numbers, the chief economist Anantha Nageswaran shared how rural demand has picked up in the quarter gone by and is expected to grow further. The CEA also pointed out how declining inflation is likely to boost consumption in the country. And well, we are joined by our guest Pronab Sen, who's the former member of Planning Commission GDP, joining us on the big data that's come in. Mr. Sen, welcome to ET Now Business at 9. Mr. Sen, big upside surprise coming in on the GDP front from an expectation of around 6.9% to a print of 8.4%. How are you reading into it firstly, and what has led to this massive uptick?
Well, one of the reasons is that they have revised the earlier numbers. So the base effect has come into play, but it's not large enough to explain the entire growth. So there is a base effect which we must take into account. And when you correct for it, even then it's a very healthy number. But I'm still trying to figure out how these numbers have happened, because one of the most striking things about the numbers that we have seen is that consumption continues to be weak, and the entire growth story is being predicated on investment. That is not a sustainable model. So when you have growth at 8.5% and consumption at 3.5%, that's not sustainable. Consumption, for a sustainable growth pattern, consumption should be about 0.5 percentage point lower than the GDP growth. So things are not clear. One would have to look at the details much more carefully to be able to figure out what is going on.
You know, an interesting quarter, as you mentioned, we also saw complete divergence in the GDP and the GVA numbers. You know, what led to that divergence? And like you said, is this really sustainable?
Ankita, let's be very clear. We know exactly how much indirect taxes have gone up, right? Now, the difference between GVA and GDP is indirect taxes minus subsidies. So what must have happened is that subsidies must have gone down enormously. Now, we know that food subsidies would have gone down because the additional 5 kgs of food grains that the government was giving was stopped. But that's not a large enough figure to explain this movement that has happened. So, but the long and short of it is that government tax collections have gone up significantly. Direct taxes have been very high. They've been upwards of 20%. Indirect taxes, we know, have been about 14% but subsidies have gone down. And the question is, where and what effects will that have? We don't have the data on subsidies yet, and we need to look at those.
Sen, given the GDP print for quarter 3 FY24, what will be the revision on the annual growth rate then?
Look, if the past revisions are anything to go by, I think you're going to have fairly significant revisions in growth.
Right. Okay. Also, we were expecting, as you mentioned, that the consumption growth is likely to lag, and rural consumption, as we all know, hasn't really picked up. When can we expect a revival in consumption?
That is difficult to say. Um, at the end of the day, the consumption story has two components to it, which is how much income are the people at the lower and middle income groups getting. That's number one. Number two is how confident are they about the future, and therefore how much do they think they need to save for the future. So there are these two elements that go into that story. And these are things which are difficult to tell because this is so personal. These are decisions households are taking on a daily basis across the board. So we don't know. The second thing that we have to take note of is that there is a huge discrepancy, and when I say huge, I mean huge, between the inflation expectations that households have expressed in the RBI survey and the inflation that's being reflected in the GDP numbers. So if you look at the GDP numbers, inflation is about 1.5%. If you look at inflation expectations, those are upwards of 8%. So there's something going on which is not very clear.
Sen, you mentioned that going forward, investment and government spending is not going to just sustain these elevated numbers. What are going to be the key drivers for growth then?
This is such a good question. First of all, if you look at the estimates that have been put out, the NSO expects fourth quarter GDP growth to drop significantly. And one of the reasons for that, I think, is precisely what you've been talking about, which is consumption is weak. Public expenditure is going to fall because the government has already spent most of the budgeted amounts, which is the basis on which I think these calculations have been made. And given this sort of scenario, if there is a sharp drop in overall expenditure in quarter four, that may continue into the following year. And that is what is worrying. What we are talking about now is the past. What we have to think about is the future.
Right, Mr. Sen, on that note, we will have to let you go. But thank you so much for joining us today.
Pleasure, Ankita. Thank you.
Thank you so much, sir. Thank you. And we'll move on then to the mega exclusive.